Budget Day 2018. You're watching Bloomberg Quint Live, India's first live digital streaming business news service.
And we are kick-starting the day's proceedings with IndianOpen. I'm Neeraj Shah. Good morning, Minka. Good morning, Ira. Promises to be an eventful day.
Yeah, absolutely.
Undoubtedly. Good morning, everybody. Before we get into the big day, let's get to the headlines this morning. The Union Budget will be presented by Arun Jaitley later this afternoon, fifth budget speech in Parliament today. The US Federal Reserve is on course to hike rates in March. The US Central Bank also announces an increase in long-term debt sales for the first time in 8 years. ICICI Bank's stock may be under pressure today after higher provisioning hurt the lender's earnings in the third quarter. Higher order inflows aid L&T's numbers in the third quarter, while Vedanta manages to meet estimates in the October to December period. A low base and rising demand are expected to aid vehicle sales in the month of January.
Well, let's take a look at the trade setup for the day. There's a bit of green on the screen, aided undoubtedly by what's happening to the rest of the Asian markets, which are bouncing back after quite a bit of sell-off that we've seen earlier half of the week as well. So Asia is doing reasonably well, let me put it that way. The handover from US wasn't bad. No surprises from the FOMC. None was expected any which ways. And the US markets ended marginally in the green. All of that points towards a flattish start with maybe a marginal bias towards the upside. But I tell you what, you would probably expect that ahead of the budget, the markets are likely to stay very, very flat. Remember yesterday too, while it showed a flat day, it was only private banks which came up in late hour of trade, which lent the index some bit of stability. But suffice to say, ahead of the big event today, irrespective of what's happening across the Asian bourses, you would probably expect our markets to at least stay on a flat note. The last few days, and we've spoken to a bunch of mutual fund investors and mutual fund CIOs as well, there have been definitive profit booking that has happened. And if it's happened in the mutual fund space, it's definitely happened in the retail space as well. Clutch of dealing rooms have said that people are taking out positions from the mid caps and the small caps all through the last few days, even yesterday, and maybe moving on to the large cap space. So that's interesting. The question mark only is if the disappointments, if indeed this pattern continues, if there are no disappointments in the budget. Arguably, everybody's saying that that won't be the case. Keep in mind, unlike the previous two budgets, and especially the FY16 budget, there are no heavy shorts in the system on the Nifty or the Nifty Bank currently. FY16, there were marked shorts in the run-up to the budget, and the big rally that we saw post no announcement on LTCG was as a result of some bit of short covering as well. We don't have too many shorts in the system, so people expecting that if there is no announcement and no disappointment on LTCG or otherwise, and there'll be a big relief rally, you might have to temper those estimates simply because shorts aren't there to support, and there won't be any kind of short covering that will happen. What to watch today? One, of course, amongst this big budget announcement, there are two small developments that will happen on the business side as well. Government will roll out the e-way bill starting today, but more importantly, from a trade perspective, the auto sales numbers will start trickling in. So ahead of the budget announcement, we'll have 2 or 3 companies at least come out with their numbers, Maruti especially. But watch out for the two-wheeler companies. I was looking at the estimates. The expectations are that these are the ones which will outperform in a meaningful way this time around. So do watch out for all of those. And from among stocks to watch, I think the headlines spoke out some of these, but just to reiterate, L&T, almost all brokerages said that the results are above estimates and the domestic execution witnessed strong revival. Won't be surprised if there's a bit of a positive reaction there. While ICICI Bank numbers missed estimates, I thought across the notes again, everybody spoke about how the asset qualities remained stable for ICICI Bank this time around. Let's wait and watch what happens to that one. But you will expect strong reactions from Coromandel. Fabulous numbers. All the fertilizer stocks were active yesterday. So while we're talking about the budget, do watch out for these names in particular. Coromandel, strong numbers. Vimta Labs doubled the profits. It's a stock that is on a bit of a roll. Let's see if there is some more upside left here. And HEG, we expected this to happen because Graphite India came out with a fabulous set of numbers. This was not unanticipated. Now the stock cracked in the session yesterday. Let's see if it reacts positively to the strong set of numbers. And last but not the least, guys, just thought IIFL, aside of course, the earnings announcement, and we were talking about how yesterday we needed to watch out for IIFL numbers to come out because of the disappointment that's coming in 1 or 2 of the brokerage names like Motilal Oswal. Not too many disappointments in the numbers, but they have announced a demerger of the capital markets, wealth and the NBFC division. So 3 businesses will be listed separately. So IIFL will demerge and then relist as 3 separate businesses. Typically promoters tend to do that because they believe there will be value unlocking here. So let's wait and watch if IIFL reacts positively to this announcement or no.
All right, L&T will be really interesting to watch given the domestic order flow, which is substantially better in the third quarter than the first two quarters. And what that tells for the underlying economy will be really interesting to see. But besides domestic cues, we do have an international cue, and that is a momentous last Federal Reserve or FOMC meeting for Janet Yellen. While the FOMC left rates unchanged in this last meeting against Janet Yellen, the unanimous vote sets the stage for more hikes starting in March under Yellen's successor, Jerome Powell. Now, here's what the committee said. The committee expects that economic conditions will evolve in a manner that will warrant further gradual increases in the federal funds rate. That's what it said in a statement. Effectively, stronger growth this year and more confidence that inflation could very well reach the 2% Fed target has spurred speculation that the Fed will pick up the pace of interest rate hikes starting in March itself. So we'll be watching that very closely. We've already seen all the volatility that's taken place on the 10-year in the US, especially and the longer term yields, so to speak, as well, and on the dollar. So it'll be, sort of an important cue for domestic markets. But that's exactly what, the Fed had to say. Now, former Fed Chair Alan Greenspan, the man who made the term irrational exuberance famous, says that investors are at it again. In a conversation with Bloomberg's Tom Keene and Scarlett Fu, Greenspan says that the U.S. is dealing with a fiscally unstable long-term outlook. Here's what Greenspan had to say.
Dealing with a fiscally unstable long-term outlook in which inflation will take hold. In fact, I was very much surprised that in the State of the Union message yesterday, all those new initiatives were not funded. And I think we're getting to the point now where the breakout is going to be on the inflation upside. The only question is when. We've been through almost a decade now of stagnation, and we're working our way towards stagflation, which, as you know, is a combination of both of those.
All right, that's Alan Greenspan warning with regards to the U.S. fisc. I always find it a bit ironical when Greenspan warns, but that's the U.S. setup. Now, of course, 3 hours from now, we'll hear from Finance Minister Arun Jaitley. So on First Word this morning, we're going to prepare you for what to expect from the budget. Neera is going to lay out the 5 most important numbers that you should be looking out for. I will make the argument for and against a cut in the corporate tax rate. Neeraj will talk about what markets are expecting. And very soon, Darshan will join us on the key sectoral impact that could potentially arise out of this budget, especially if the finance minister does, as expected, focus on the agri, rural and SME sectors, the companies that could benefit from those additional spend. So let's kick it off first with Ira, the 5 most important numbers that we should be watching out for, Ira.
All right, guys, I know you're tired of hearing me talk about them.
No, we're not.
But as the song says, one last time. So we will go through some of these numbers one last time. The big numbers to watch, just to give you an overview of everything we've been talking about for the past month and everything we'll be talking about through the day today. The magic number is 3%. That number, of course, denotes the fiscal deficit target, which we will not probably reach, not even this year. 3% is the FRBM target. It was for FY18. It got pushed out by a year to FY19. Most brokerages are expecting that even in FY19 you will not manage to hit 3%. So the expectation, what is built into the market, is that you will get something close to 3.2%. If you get 3.2%, steady state compared to the budget estimate of last year, that is FY18, and perhaps the markets would not react. If you get anything more than 3.2%, there could be still upside in bond yields to be had. But if you get a 3% number, bond markets will be very, very surprised, and you would see a significant rally in bond prices. Now, guys, just stay with this chart for a second, because, we spoke to Arvind Subramaniam after he put out his economic survey, and he said, why attach this importance to one number? What is 3%? Well, it's all well and good to say what is 3%, but, that 3% number has been put in every FRBM report that we have had. It was there in the first, it was there in the second, it's there in the NK Singh committee report. Yes, it's a construct that has been borrowed from the Western world, so maybe maybe it's not a great idea to just, sort of lift and drop it into the Indian scenario. But that's what your individual committees have said as well. So it is a matter of credibility. And if you, don't believe in a 3% number, then let's throw it out of the window. That's not a serious suggestion, because if you throw it out of the window today, the markets will be worried. But, we've had a long road, from 4.4% in FY14. The government has done a lot to consolidate fiscally. So let's give them credit there. But perhaps they should continue with that and at least try and hit 3.2% and then tell us what they really intend to do with the fisc from here on. So big number, 3%, that's one number to watch. What else are we watching out for? The borrowings number, as a consequence of the fiscal deficit, there will be a fairly substantial market borrowing. Bloomberg poll suggested that number would be about 6.5 lakh crore in terms of gross borrowings. If it's lower than that, and if the government suggests that they're going to borrow more from, say, the National Small Savings Fund, or they're going to raise more non-tax resources and hence limit their market borrowings, that'll be good news. Unlikely that you'll get a gross borrowing number substantially higher than that. Work on the gross number first and then on the net borrowing number, because the net borrowing number always gets distorted by a number of things. So that's one important number to watch. At 6.5 lakh crore, you will be higher than the revised estimate of FY18, which settled at about 6 lakh crore. So those are the two big numbers on fiscal deficit and on borrowings. Watch for the capital expenditure number. Last year, when the finance minister was presenting the budget speech, he said that I'm budgeting for a 25% increase in capital spending because I think the economy needs support. Does the government feel it can continue that in FY19, or is it ready to hand over the baton to the private sector? So watch for the increase that they budget for in capital spending. Also, if they do more capital spending, then your quality of fiscal consolidation also continues to improve, which, let's give it to the government, they have done a fair amount on. Those are the headline numbers. Some individual scheme numbers you want to watch for. These are the 4 key rural schemes. I want to point out the employment, the Manrega scheme. You had 48,000 crore last year. That was a record high already. During the course of the year, you added another 3,500 through the supplementary demand for grants. So you're already at about 52,000. There's some talk of a 60,000 crore number for Manrega. If they do that, they're trying to support the rural economy in the eventuality that agriculture doesn't provide you enough employment opportunities. Awas Yojana rural, there are two parts to it. There is a rural, the Grameen, and the overall Awas Yojana. The Grameen Yojana had 23,000 crore. Given the focus on affordable housing, there should be an increase in spend there. The rural roads program, 19,000 crore. Perhaps there'll be an increase in spend there. And then the Gram Jyoti Yojana, which is the electrification scheme, is also a focus. So if you put those 4 numbers together, while not the overall rural spend, but you'll get a sense of how much they're increasing spend across some of these key rural headline schemes. Infrastructure, again, important to see what next year's number looks like. The FY18 budget estimate was about 3.9 lakh crore. Within that was the rail, the roads, etc. So see what they're doing in terms of increasing that spend as well. That in sum total, guys, will give you a sense of where the budget priorities lie and what the economy will look like in the next year, perhaps.
All right, 5 most important numbers to watch out for from the budget. Ira has laid it out for you already.
Yeah, and in deciding whether to cut the corporate tax rate, the Finance Minister Arun Jaitley will have to choose between 1, keeping his word versus maintaining fiscal prudence, and 2, animal spirits versus equitable tax policy. Now, Menka, let's hear out all the arguments for and against the corporate tax cut.
Okay, so for is this, he made this promise in 2015. That's what he stood up and said in his speech in 2015. And he has already partially implemented the promise, which is to say, the promise was this, that he wanted a simpler tax system, a tax system that helped business do business and not get involved in litigation in tax, a tax system that involved lower rates and fewer or almost no exemptions or deductions. That was the broad mandate that he put out there, right? So the first thing that he wanted was the 2015 promise. The first thing in favor of a tax cut is the 2015 promise that he made. The second thing is the partial implementation that he's already done, which is to say that we already saw some deductions and exemptions start falling off April 1st, 2017. And we've already seen a headline tax rate cut for small enterprises. So the tax rate went from the statutory rate of 30% to 25% for those firms that do an annual turnover of 50 crore rupees or less. So a partial implementation has already taken place. The third reason for why he may consider doing or, undertaking a tax cut is because corporate India keeps complaining that we pay a very high tax rate. And there may be some truth in that. Let me give you some comparative numbers there. So at about 33%, so that's the 30% headline rate plus cess, surcharge, all of that. We compare rather poorly with China's 31%, Russia's 24%. And according to EY data, if you add the dividend distribution tax, which is also a tax on your distribution of earnings, then effective rate, including surcharge, etc., comes up to 55%, because our dividend distribution tax is 15% and it's taxed at the hands of the company. So 55%, it puts India, as you can see on that chart on your screen, at pole position in terms of the number of countries and their tax rate. So we at 55% are much ahead of the US at 43%, which was before their tax reform, and Brazil at 34%. The US has since then reduced or promised to reduce its tax rate to about 21% from the statutory number. So this is the argument that industry has been making, saying if you want to remain competitive, if you want to draw foreign investment, if you want Indian companies to invest here, then you must form or create a competitive tax scenario and hence reduce the rate. Okay. The fourth bit is animal spirits. We've known that private investment hasn't picked up much, and therefore I think one of the arguments being made, and it was made right here on this table by Rashesh Shah, the president of FICCI and the head of the Edelweiss Group, is that retained earnings are, sort of very important to be able to do future investments. A cut in tax will help build retained earnings for companies, and therefore it is prudent for the finance minister to consider this, despite the fact that he has many other spending priorities. So those are the four key reasons for why the tax rate should be cut or could be cut. Those are the arguments in favor. Let's look at the arguments against, because I quite favor those. Who benefits from a tax rate cut? Okay. Now, mostly in India, we've seen it's shareholders who benefit, because companies are able to, sort of report higher profits. That means higher share prices. And that means that a fairly small community of people in this country, a couple of percentage of people in this country, actually benefit from a tax rate cut. Now, just contrast that to the kind of transmission we've seen happen in the US right after they announced a tax rate cut from their, 30% to 21%. 70 companies and more, okay, and these are top line companies. I'm only looking at the very big ones. 70 companies and more have either announced an immediate one-time bonus for their employees, or some have decided to distribute this tax benefit through restricted stock options. Others have also commensurately increased their minimum wages. So all of this has happened within the 3-4 weeks of a tax cut being announced and legislated. Immediate transmission to a much wider stakeholder community. Can Indian corporates promise us that? Can they ensure that this will get passed on, not just to shareholders, but to employees, through hiring, through better wages, through bonuses, things like that, right? So I think you have to look at who is benefiting, and you have to look at that in the backdrop of the debate that's been going on for the last 2 years, that there has been an unequal distribution of benefits or gains of economic growth across economies. So in our economy as well, we need to consider that. The second thing is the indirect tax to GDP ratio is already very high in this country. Now, an equitable tax policy would effectively mean higher direct tax contribution to tax revenues and lower indirect tax contribution, because indirect tax, as you know, is paid by everybody. Even the poorest of poor, when they buy a packet of biscuits, end up paying indirect tax, whereas only the rich or the well-off end up shouldering the burden of direct tax much more. If you look at the numbers, in 2000-2001, the percentage of direct tax as a percentage of total tax revenue was 36%. It went to a peak of 60% or 61% almost in 2009-2010. It's now come down to about 50% in 2016-2017. So 50% of our tax revenue comes from direct tax, 50% comes from indirect tax. That's not a good ratio. It's a very inequitable ratio. So if you keep reducing the direct tax contribution, you're putting more burden on indirect tax, and that is not fair. So that's the second reason for why you should not cut corporate tax rates. And the third one is that, look, Iras just pointed out, he already has enough spending priorities, right? He needs to do something to help the beleaguered rural sector, the SME sector, the agricultural sector. So he has to choose between who he wants to help, the large corporations or the smaller ones. I'll end with a quote from none other than the chief economic advisor, who in an interview with Ira and I said, look, there are already enough things that the government needs to do this year. Just simplify GST, make sure that agenda works properly, support agriculture and agricultural prices, privatize Air India, complete all the resolution efforts when it comes to IBC. And then he goes on to say, I'm warning against the kind of temptation that says you need to do more and more. In fact, he said, when he was responding to a question on do you need to cut corporate tax rates. There's a lot which is being done. Finishing those things will bring back animal spirits along with a cooperative world economy. And so that's the last word coming from the CEA. He himself did not seem to be in favor of a corporate tax rate cut. So that concludes the arguments against.
I'm going to add one quick word to it, a data point that came yesterday. Nobody's saying that there are animal spirits in the
core
economy.
Sector.
Not the core sector, the revised numbers for previous GDP numbers, years. And I don't know if my producer Panchmi has that data ready. But it essentially changed the expenditure side data, which tells you that in capital formation, you did about 7.2% growth in 15-16, 4.1 in 16-17. And the advanced estimates of 17-18 suggest 4.5%, which will get revised higher, because 16-17 have been revised lower. So if you actually look at that, it's not like we've been devoid of investment. Gross fixed capital formation hasn't been, clearly at the levels of 2007, etc., or even 2010 to 12. But it's not like it's negative.
Yeah.
So,
also, I think just to add to that point, I don't think we'll ever go back to the levels of 2005, 6, 7. And we know what the outcomes of those levels are. We're seeing so many projects stuck in our unviable situations at this point in time, right? Yeah. So I think everybody who has spoken to us has concluded that private investment will probably never take the shape and form that it did in the last decade. 100%. It will be a more muted number in the years to come. It will probably be a different structural, sort of pattern. So, yeah, I don't know if he needs to cut rates to support animal spirits. I don't know. But this is the balanced, sort of reasons pro and, against any corporate tax rate. Of course, only Arun Jaitley knows if he's going to go ahead and cut it or not.
Now, having discussed all of these, it's also important to figure out what the impact that previous budgets have had on the market and what the expectations are from this budget as well. So just a bit of few numbers and then some data points as to what equity markets would like and would not like. And that's the set of data that I'm putting out for you. Now, I've split it into two. Essentially, one, the Nifty, which is encompassing almost all of the expectations from corporate India and rather markets. And two, it would be Nifty Infra, because that's that one key index that tends to react every single time. So look at what the run-up to the budget was in this order. The first 3 years, I've taken the last 5 years, and the preceding 3 years was hardly any kind of build-up to the index. It was only in 2016 when the markets actually corrected about 7.1%. This was when the global markets had a bit of a tizzy and the first murmurs of that long-term capital gains tax had come about, and there was no clarification from the government with regards to this. And the reason I bring that up is because in the subsequent year, which is the date of Feb 1, 2017, where you're seeing a bit of an uptick, markets had taken a bit of a nervous flavor in the month of December and even in the first half of January, when the first murmurs of LTCG again resurfaced, only for the FM to come and clarify that there is no such proposal, and then there's a bit of a relief rally. But as you can see, except for the last 2 years, and by last 2 years I mean Feb 118, which is the current year, the markets haven't really approached the union budget with a lot of fanfare. Similarly for the Nifty Infra, again, no conclusions out there, because it's been an up, down, up kind of a scenario for Nifty Infra. Stark contrast, look at that. Up 1 year, down 1 year, so no pattern there. But the key pattern emerges when you look at what happens post the budget on almost both of the key indices that I've chosen. So firstly, the Nifty 7 days post-budget, and I don't have the 1 month data post-budget, but if you look at 7 days post-budget, on almost all occasions, we've had the index moving up. That 2016 data is the same data that I was pointing towards, where in the pre-budget, there was a bit of a disappointment. And then when there was status quo on taxation and the global markets also picked up a bit, there was a big rally, but there was also a bit of a short covering led rally. So that's a bit of an anomaly. But as you can see, the last 4 years, we've had the markets reacting positively in different shapes and forms, but positively post-budget. 10 out of the last 14 years, the equity markets have given positive returns 1 month post-budget. And then Nifty Infra, almost all of the years that you pick, irrespective of what it did pre-budget, Nifty Infra has had a good run post-budget. Of course, the quantum of the returns vary, but Nifty Infra per se has had a fairly good return post-budget. So keep in mind, this time around could be different if there is some bit of tinkering with rates or otherwise. And again, it could also be different even if there's no tinkering, because as I said in the trade setup, quite unlike what happened in 2016, there aren't enough shorts in the system for us to support a short covering led rally. So no news is good news, but may not be a big relief rally. But just before I wind this up, just a very quick summation of the three things. I've just chosen three simple things that I know there are a lot of things, but three quick things that the markets will like and will not like. So what the markets will like: fiscal discipline. I think already, Ira has spoken at length about it, won't dwell too much on it. The other bit, of course, that always comes up is LTCG, the last 3 years. I remember Ira in the meeting yesterday said that if LTCG comes one more time, the debate, I'm not going to be a part of it. But yeah, you could well argue that that would be the case, because it's been a something that's always come up but never really reached a conclusion. So this time around, the markets, equity market investors would be hoping that that's actually the case. And no excessive populism. I think everybody is going in with expectations that there'll be some bit of populism expectations, even though Prime Minister Modi said that people don't expect freebies and softs and they want development in those couple of interviews that he gave. But the market men, at least that we've spoken to, have said that there's some bit of populism baked in. Hopefully there is not excessive populism. What the markets won't like, again, a reversal of all of those if indeed LTCG comes back, and whether or not STTT is taken off is another thing. But if LTCG makes a comeback, you can expect the markets to react negatively. So that is one key point. And of course, any fiscal slippage is something that the markets will definitely not like.
Yeah, it's interesting to watch how the markets have responded to budgets in the last 4 years. And you've pointed out that, they've sort of not substantial gains, but they've shown some gain, except for that 1 year of 2016, where the gain was more substantial on account of relief on LTCG. But most of it has also been because this government has stuck to its deficit targets for the first 4 years. In 2015 or 16, I can't remember which one, 15 maybe, Arun Jaitley did move out the targets set by the previous government. He didn't change the numbers, he just postponed them by a year, if I remember correctly. But he did that given that he had inherited a tough economy, right? He said that, all through. So it's been a disciplined government. And every speech, if you check,
that's true.
Every speech, he has underscored the importance of maintaining fiscal discipline. So, I think that's why the markets have appreciated what they have. And the fact that they've stepped up spending, last year we had the pay commission, and all of those things, which they thought that, despite keeping discipline, if you're going to be able to spend in infrastructure and things like that, then this is going to be helpful to the economy. So let's see how it goes this year. But that's the broad view on what markets will be expecting from the budget. Now, Darshan joins in to tell us how some of the most important sectors might be impacted by announcements made in the budget. Darshan?
Yeah, so one of the important sectors that you need to watch out will be the auto space. Clearly, there seems to be some indication that, in terms of, phasing out old vehicles which are over 10 to 15 years, or probably scrappage policy. So watch out for some of the commercial vehicles like a Tata Motors or an Ashok Leyland or an Eicher commercial vehicle. So they probably will react positively. In terms of a higher allocation to JNN, URM, watch out for some of the commercial vehicles again. That's positive. Some of the rural play themes is something that we're watching out for. Important to watch on commentary on electric vehicles. Watch out for companies like JBM Auto or a Goldstone Infra, or probably some of the battery makers that could react positively. And we are watching out for some theme as far as rural push is concerned, and that is where the two-wheelers will definitely benefit here. As far as infrastructure is concerned, there will be significant amount of announcements that will come in terms of roads, rails, smart city, higher allocation as far as the road sector is concerned. Higher defense allocation is something that you can anticipate this time around. Across the brokerage reports that have come out, they have spoken about higher allocation for defense, and reintroduction of infrastructure bonds is something that we're seeing. Now we have a list of what they've done, or the allocation that was there in terms of roads, railways, metro, defense and urban infrastructure. What they did in FY 18, that was the allocation that you can see on your screen. So expect across the board, analysts expect anywhere between 10 to 20% increase across the board in terms of these schemes. The other theme is the consumer play that you have to focus on, mainly in terms of higher rural spend. will aid some of these FMCG companies. It will be more of a sentimental impact, but watch out for companies like, Imami, Dabur, Bajaj Corp. In excess of 40% of their sales comes in from these rural areas, and so they will definitely benefit. There is custom duty tweak on gold import. If that happens on the lower side, watch out for companies like Titan, TBZ, Tara Jewels, Thangamayil Jewelry. And finally, change in excise duty on cigarettes and cess on cigarettes. So that is extremely important. Watch out for ITC, Godfrey, VST. So if there is no change, it is positive. If the cess is put in anywhere between 5 to 6%, CLSA believes that, it will be neutral, it will be accepted. Anything on a double digit will be extremely negative for the cigarette companies. And finally, apart from it, there will be some smaller themes that the government will speak about. Higher e-governance allocation. Watch out for BLS International. Watch out for Vakrangi. Watch out for Infosys, TCS. Some of these IT companies will definitely benefit. Ganga cleaning, expect something to happen, and watch companies like Dredging Corp, ITD Cementation, all these companies to react on this number. And healthcare boost in terms of hospitals. If anything happened, watch out for all these hospital stocks which may react positively. But infrastructure as well as, the auto space is something that definitely will be in focus, and ITC definitely will be in focus this time around.
Yeah, I can't remember a budget when ITC was not in focus.
It's
like the LTCG debate, right? Every budget we go in wondering. This budget, though, I know Darshan's pointed out, but there is really no power with the central government to impose any additional cess. It has to come from the GST Council, right?
Except for that national calamity contingent duty, and if they levy that, and that's the new elephant in the room for ITC. So let's wait and watch. But I take on your point, because the GST committee, I believe, will eventually have the...
Only the GST Council has the right to determine anything in terms of cess or any indirect tax impact on, cigarettes. So, I mean, I can't imagine the finance minister preempting them. So far, he has never done that. So why would he do that this time round, right? But like Darshan said, you can't go into a budget without talking about ITC, can you?
Okay, one last question before we end, and I don't think any of us have the answer to that. Is the speech going to be in Hindi?
Yeah, so some media put out this story yesterday that he's going to speak in Hindi.
I think DNA did a story saying that it's going to be delivered in Hindi.
That should be interesting.
Yeah. How do you say long-term capital gains tax in Hindi?
Maybe it's English.
How do you say fiscal deficit in Hindi?
Good question.
All right, we get out of the studio and start doing our translation.
Invite Sanjay Pugalia in.
But there's one more thing, actually. Will he give us any guidance on whether he intends to reduce? Because remember, petroleum products are outside of GST. Okay? And when prices had gone down, they had increased the taxation on petroleum products. Now prices have risen. And that is going to feed into consumer stress and inflation on account of that. So will he give us any guidance on whether the government intends to reduce any of those taxes so that the effective price for consumers is lower? And if he is going to do that, what impact will it have on the fiscal deficit? So that's the one last thing we haven't discussed much yet, but that's one thing that we'd be watching out for as well.
And the oil subsidy numbers will be higher as well this year.
Because of the
higher oil prices.
Oil prices. So that's it. All right, that's all we have for you on First Word this morning. I hope we prepared you comprehensively for what to expect from Finance Minister Arun Jaitley's budget. We'll be back with an editorial huddle at 9:30. Raghu will be joining us at that point. And, we will continue to discuss really the politics of this budget as well, because don't forget, this is a year in which we will see 8 state elections. So this budget is as oriented towards you and me as it is to the voter, and therefore that will be important to talk about as well. But that's at 9:30. Right now, back to markets.
Yes, indeed. On the other side of the break, while we prepare you for the budget, we'll prepare you for the day's trade as well. Stay tuned to Bloomberg Quint.
Welcome back. You're watching Indian Open. I'm Pradeep Pandya. If you look at the SGX Nifty right now, it's pointing at a slightly higher opening. Maybe other Asian indices are kind of mixed, but Japan is doing well, up by around 1.25%. Shanghai is down despite good manufacturing data. Maybe the fine prints are not that convincing. So how do we start? All eyes will actually be on budget. But if you look at how the traders are really positioned ahead of budget, maybe there has been quite a cautious approach to the budget, the kind of correction we have seen in the run-up?
Yeah, the last 3 days certainly so. But I remember doing the show yesterday, Pradeep, and we'll ask our guest about it. There aren't too many shorts in the system, which is quite unlike what happened in 2016, at least I believe, when the rumors set about a set of short positions. Yeah, so not too many shorts in the system. So should be interesting to see how we approach the trade post-budget, if there is nothing that happens.
Yeah, so there will be fresh reaction to whatever positives or negatives we get. But how are the derivative traders really positioned ahead of budget? Navneet Saluja is here with all the details. Navneet?
Good morning, both of you. Well, as you guys have mentioned that there are no enough shorts in the system. And let me tell you, in the last 3 sessions, when such a big event is lined up, usually traders like to take position on the index, which is Nifty or Bank Nifty. But in the last 3 sessions, we've only been seeing unwinding and profit booking ahead of that crucial event. So yesterday too, the Nifty futures, however, closed with a premium of 28 points, but there was unwinding of almost 4% when it came to the open interest. Let's just pull up Bank Nifty. That has seen massive unwinding in last 3 sessions at least. Bank Nifty yesterday shed almost 4%. Well, all eyes will also be on the India Volatility Index, though it still remains at elevated levels of 15.5 to 16. But remember, in the last 2 to 3 sessions, we've also seen a massive cool off when it came to the Volatility Index. But depending on how the budget pans out today for the markets, you could see volatility coming about. Well, in terms of the put-call ratio, some sort of relief. There was a time when we were at about 1.8, 1.9. So that's cooled off to 1.29 for Nifty. And for Bank Nifty, it's below the mark of 1. In terms of option strikes, what happened yesterday? Well, if you look at the concentration, it is haywire. Maximum open interest concentration is at 10,500 and at the 11,500 calls. So we're looking at a very, very wide range. And yesterday, what you saw was massive call writing, which came around the levels of 11,300, 11,400, and also the 11,500. No major put writing was seen, and that's the reason why the Nifty PCR has remained around the mark of 1.3. How are the FIs positioned ahead of a crucial event? They didn't do anything yesterday because they've been buying in the cash segment. But yesterday there was a small sell figure which we saw from them in the cash segment as well. So on the index futures, not done anything. But remember, the positioning is on the long side. So 70% long on the index futures. If you look at the options data, definitely they've entered the event by protecting themselves by buying put longs, and also they've written put shorts. So probably to hedge their cash portfolios, they've been buying puts in the last 2 to 3 sessions. Lastly, I'll just take you through a couple of stock futures which will be in focus. We've been talking about the rural theme, and Jain Irrigation is one of them, but that counter is entered into the F&O band today, and the other one is Fortis Healthcare. There was a huge amount of short positions being seen on the stock futures front, and yesterday stocks like Havells, Arvind as well as Escorts, all three of them saw massive fresh short positions being built up.
Well, thanks a lot for that, Navneet. Let's get in our fundamental expert on the show, Amit Khurana of Daulat Capital, with his thoughts on the markets and, so many expectations from the budget. But Amit, let me first just take a leaf of what Navneet was saying as well. We were just doing some number crunching about how the markets react post-budget. Inevitably, 10 out of 14 budgets, post-budget reactions have been positive. How do you think we are heading into the event?
Well, it's anybody's guess. I think a lot of factors will determine how we react today. It could be very volatile depending upon how the numbers work out. But the most important parameter, I guess, the markets will react whether we get a LTCG introduction in this budget or not. I guess some of it all, market is essentially going to react to that net of all. Yeah. If there is any tweaking of that number, then you will probably see a negative reaction, which could be quite sharp. If the mathematics of the budget looks quite convincing, especially the assumptions which build into the nominal GDP number, if they are able to justify the overall corporate tax rate reduction, which is likely, and of course not tweak too much on the disappointing side, then I would expect the market would buy into any dips that we get post-budget.
Navneet was just making a point that there aren't enough shorts in the system.
Yes.
My question only is that if there is no negative news, is there a case for a massive relief rally or not quite?
Yes, there is. There will.
Even though there are not enough shorts?
Yes, there will be a significant buying. There's enough money sitting on the sidelines.
Okay.
And remember, even though we've seen the FIs buy into India equities over the last few days, essentially the month of Jan, but we still have underperformed the global markets, and we are still relatively underweight in their overall emerging market positions. So there will be a big relief rally which you will get, and which you will see a significant surge, especially on the mid-cap side, if there is no negative news.
Okay, but suppose it's a pro-growth budget and a lot of sectors will kind of welcome it, and still then you have an LTCG coming in. Will markets still fall?
Yes, I would expect
By how
that.
much?
Well, that's difficult to guess. I think the contours of that will determine. I mean, is there a marginal tweaking of the LTCG? Is there a definition change to it from 1 year to 2 years? Is there a full-blown LTCG comes out? I think the reactions will vary on that. But markets are not prepared for an introduction of an LTCG regime as of now. We are significantly on the bullish side. Most of the positions are on the positive side, and therefore any negative news will get a very, very slow reaction. Of course, that may be bought into over a period of time. There will be significant, probably a contraction of the SIP flows onto the mutual fund. Because remember, any tweaking of the definition will impact each and every investment flow into the market.
Okay.
So there will be a sharp reaction. How fast, how sharp can that be? We will have to wait and watch, depending upon the contours of the LTCG, if at all it comes into play.
Okay, so let me think of another complex scenario that may, happen is that the budget is good, there is no LTCG, but there is meaningful compromise on fiscal deficit, and therefore bond market kind of falls, and you have a rally in bond yields. In that case, to what extent will equity markets be worried? Because it looks like, what bond market wants is not exactly what equity markets want from this budget. Yeah,
I understand that. That's a very valid question. I think markets are prepared for about a 15 to 20 bips slippage on the fiscal deficit anyway. Now, if you do the mathematics, that comes to a number of about 25 to 30,000 crores extra. Now, that is probably baked into the market expectations, and I don't think the bonds will react very negatively to that kind of a scenario. So 3 becoming a 3.15 or a 3.2 will not really cast too much of an issue about there. Remember, there's also the issue of how much of the stability that we get to see on the GST numbers coming in. We saw a very bad number for 1 month, and it started recovering, and the expectation is that as GST gets far more stable as a regime, you will see the tax numbers moving up gradually towards the targeted levels, which is about 92,000, 93,000 crores odd. Now, if that confidence builds up, I don't think markets will take too much of a negative view on a slippage of 10 bips or 20 bips here or there.
Yeah, I think GST would be a difficult math really, to anticipate at this point of time. That's why there is also a suggestion that maybe you should talk about a range and not an exact level. But let's see.
Yeah, let's see. And different brokerages have different revenue estimates for FY19 as well. Just that because April could be a much bigger bump up month in the GST regime compared to what earlier used to be March, and that FY18 has only 11 months of revenues, FY19 will have 12. Maybe there is a case for a bumped up number to be shown any which ways, but yeah, the range would be probably something. We'll of course get to know what happens, all of that. Okay, this is Finance Minister Arun Jaitley leaving towards the North Block. Trust me, today all of these images will play out, and everybody will watch this with as much fanfare. That briefcase in his hand is something that is vitally important. We'll only get to know what's in that and the takeaways at about 11:15 odd. Interesting to see if that speech is delivered in Hindi or no. That's something that we'll watch out for too. But, we've spoken so much about the budget. There is a market beyond budget as well. There are some numbers that have come out post-market hours yesterday, might react today, early morning. So let's talk about all of that with our research team. In our research huddle, a clutch of names. We all know about L&T and ICICI Bank, but there are some other mid-caps that have come out. There are some stocks which are in news as well, particularly IIFL and some others. So let's talk about all of that with our research team. Good morning, all of you. Well, there's a solitary male, so let's start off with him first. Darshan, L&T, I'm presuming.
Yeah, it's a decent number because if you're looking at it, top line growth of 10% was seen on L&T, coming in line with what we were anticipating. EBITDA margins at almost 10.9% versus our estimate of 10.1%, and clearly profit growth was seen on the counter despite lower other incomes this time around. Mainly the order inflow was the big surprise. We were anticipating close to 40,000 crores of orders to come in. They surprised with an order inflow of 48,000 crores. Mainly the management also said that some of the bulky orders that were not placed because of the GST issues have come into this quarter, and basically infrastructure and hydrocarbons orders were the ones that led to the growth coming in. And because of that, they haven't changed the guidance. So if you're looking at the guidance on the revenue guidance, on the profit on the margin guidance and the order inflow guidance, they managed to maintain it the same. In terms of which were the sectors that grew, it was infrastructure, hydrocarbons, the development projects, the IT projects. All of them grew significantly. Most of the brokerages have given this the thumbs up. They said the domestic inflow execution, the domestic order execution, all of them was extremely positive. The only concern that came across several brokerages was the working cycle, which has actually deteriorated slightly because of GST related issues. But nevertheless, strong set of numbers, strong commentary from the management.
Well, we'll watch out for that. Ash, we should watch out for Vedanta as well, Nikki.
So in In line with estimates number on operational front, though the bottom line was a little miss than what we were estimating, but then that has a reason. If you look at the basic numbers, revenue up by 26% at a number of around 24,361 as compared to 23,600 that we were working with. Net profit has come down, as I just mentioned, at a number of 2,053 odd crore as compared to the estimates of 2,498 crore. EBITDA, that's a 15% year-on-year growth that we're looking at. Margins have expanded at 28% in line with estimates. The EBITDA beat has been driven by higher zinc and oil prices, and also the volume ramp up at aluminium business has aided the margins. Currency appreciation, lower sales at iron ore along with copper has partially offset some of the operational level efficiency of the company. Bottom line, however, was impacted by hardening of yields. We saw a dip in other income as much as 44% on year-on-year basis and 37% on sequential basis. Net debt on a sequential basis went a little bit higher, but then overall net to EBITDA was pretty much comfortable at 0.7 times. In terms of guidance, we do expect some kind of easing coming in terms of cost of production for aluminium business in the next quarter. Moderation is also expected for zinc India. However, we might just see some kind of escalation, temporary though, in terms of cost of production for zinc international for the quarter ended March 2018.
Okay, thanks for that, Nikki. ICICI Bank, what would do, because the mixed number, asset quality stable, numbers not quite there. What are brokerages saying?
Basically, all brokerages have taken the numbers positively. So, in fact, you've seen quite a few target price hikes. I'm just going to talk about Credit Suisse, which has retained and outperformed and hiked the target price from 347 to 405. They've said that the key reason is that the bulk of that NPA addition has come from known stress, and again the fact that RBI order did not really throw up any major hiccup, and they believe that ICICI Bank remains the best capitalized corporate lender. Morgan Stanley has retained overweight, but its target price is also relatively higher at 480. They've said that they expect the bank to show continued progress on asset quality over the next 5 to 6 quarters, and hence that remains the top pick for 2018. So in all likelihood, it was a miss on the bottom line numbers, but asset quality is good, so I'm not sure if the markets will probably give more weightage to that fact.
You believe the asset quality stability has more importance?
Stand out. It should. And brokerages also hike target prices. So.
Okay, great. Shraddha, thanks for that, for your opinion as well as the brokerages. What about the stocks and news, Saloni?
So first up, big news coming in for IFL Holdings. Now the company has announced Group demerger plan, which will result in 3 listed companies for their 3 separate businesses, that is wealth management, capital markets and NBFC. Now this is of course subject to multiple regulatory approvals, and according to the press release, the reorganization process can take up to 10 to 12 months. Now moving on to Quest Corp, the company has announced 2 acquisition plan. They will acquire Monster.com for $14 million, while they will also acquire HCL Computing Products for an amount of 30 crores. So we may see some reaction there. Another stock that will be in focus is Amtech Auto. The company said that NCLT has granted extension of 90 days for insolvency proceedings. And lastly, Suntech Realty will be in focus after the company announced its plan to enter into affordable space with potential development of 100 acres in Mumbai.
Okay, thanks all of you for joining in and giving us those perspectives. Amit, wondering, if any of the results that stood out for you, either ICICI or L&T for that matter, or even the broader end of the spectrum, I thought numbers like Coromandel, etc. looked very, very robust.
Well, yeah, I think we have to say that this is something that we expected, but I must make a categorical point. ICICI Bank, I thought the numbers, especially the slippages, could have been a little better. So versus our expectation, that came a little tad higher, but I think broadly the trajectory seems to be very positive for most of the corporates that we are expecting, and especially corporates which are operating in the classic economic zone, so to say, for the country. So very important to understand that the quality of the earnings is improving, the trajectory is improving, and our sense is that this will only accelerate as we get into FY19, and therefore the positive stance that we have on all these names.
But ICICI Bank, you would be a buyer at these levels as well. Okay. Any thoughts on Coromandel very quickly?
Well, Coromandel, most of the fertilizer names have been impacted because of higher raw material costs, but the numbers have been relatively better off than the peers, so the stance would be still positive on that one. But that's a slightly different play versus the traditional agrochemical model that you find within the domestic space. So slightly different model. So there I would probably look at also other models like a PI, so to say, to play, because their trajectory is getting better.
Could L&T be the stock of the day given the numbers and also budget day and a lot of focus on infrastructure maybe?
Well, yeah, I would only go by the earnings. I think this is one of the rare instances wherein L&T has reported such strong order book inflow. It's been years that we've not seen that number, and this is the first time. And remember, every time they start with an order inflow guidance in the month of May, they always tend to miss it. This will be one of the few years that they'll be actually able to meet it. So that's a very big change that we're seeing in the way the overall environment is shaping up for stocks like L&T.
Okay, so that's the call on some of these large caps. Let's look at how technicals are really positioned at this point of time. Shrikant Chauhan, Senior Vice President, Technical Research at Kotak Securities, is joining us, and also Samit Chauhan, Chief Analyst, Technical and Derivatives at Angel Broking. Shrikant, to start with you, yesterday we saw some bit of recovery from lower levels. What are the key levels to watch out for in today's trade? What kind of range will you really be trading with, because it could be a volatile day?
Yeah, absolutely. Good morning. Always like we see major volatility during the day of event. Today also, like, we are prepared. I think 10,900 is going to act as a very good support for the market, because 10,900 acted as a very good support in the previous series also. This time, the way there is like option data, we are of the view that 10,900 in any case, if we see in today's date, then certainly there we can take a contra call of going long, because whatever the retracement that already we have seen from 11,170 is getting oversold close to those levels. So around those levels we can take a contra call of going long. And on the higher side, we are of the view that 11,170, which was its immediate highest level, is certainly going to act as a resistance. But above that, 11,300 is the next level to watch out for. While looking at the option data and the PCR ratio and the way the open interest is there, I am of the view that the positions are still on the lighter side. A lot of people have squared off their positions. So going on the higher side is a bright chance.
Okay, so you expect some kind of upside. Samit, on a day like this, when there could be a lot of volatility, how do you really plan your day? How do you really trade? I think that's the most important thing that every trader would like to know.
See, to be honest, before the event, we won't be taking any kind of position. Yes, and post the budget also we'll see immediate reaction, and we would rather let prices stabilize, and if that happens, then we'll be closely watching few key levels. As far as option data is concerned, it clearly indicates that since last couple of days we have already seen massive option writing. As far as call is concerned, 11,300, 11,400 added huge amount of position during yesterday's session. So in any kind of favorable outcome also, there's a limited upside for 11,300, 11,400. So those levels would be watched quite closely. On the lower side, we were of the opinion that before the event, the important support level of 11,000 won't be breached on a closing basis, and this is what we saw yesterday also. We saw decent recovery. So as far as put option is concerned, on the lower side, in case of any unfavorable outcome, 10,750 to 10,800 would be seen as immediate support level. So for today's, our range would be on the higher side, 11,300 would be the important resistance to watch out for. And on the lower side, 10,800, 10,750.
Okay, stock ideas for the day. Gentlemen, Shrikant, let's start off with you. 2 stock ideas for the day.
So I would like to go with Ashok Leyland, which is trading around 125 levels. The stock is forming a base building formation. At the same time, it is into short-term breakout formation. So in the near term, we are expecting 130, 132 achievable. With a stop loss at 124, certainly we can initiate long position in Ashok Leyland. The other stock which we like is JSW Energy, which closed around 87, 87.50. And if we go through with its long-term pattern, then it is very strong. Currently, it is corrected to its support area of 85, 84. And from again, after hitting those important support, it is reversing back. So it's a very strong bet. And from here, we are expecting 91, 92 to achieve. With a stop loss at 85, we can look for adding this position to our trading portfolio.
Samit?
See, today being an event, we are likely to see higher volatility, so traders are advised to follow strict stop losses for their trade today. First buy would be on IndusInd Bank. If we look at it, yesterday's close, it has closed at its near-term highs. So we expect this stock to head higher. The momentum is likely to extend towards 1790. It can be bought with a stop loss of 1740. Our second buy would be on Southern Petro. This stock has already broken out last month from its 20 years condition zone. The volume activity has picked up substantially, so we would expect some kind of buying to emerge in this particular counter. Immediate target would be around 14.5. It can be bought with a stop loss of 40, and a solitary sell call would be on Asian Paints. This has been one of the underperforming stock of late, and day before yesterday we witnessed a decent breakdown from important support levels. So we expect this weakness to extend. Target 1100, stop loss at 1150.
Okay, and these are some fresh visuals coming in. Once again, you can see Finance Minister. I think it's coming out of Finance Ministry now. Earlier visuals were probably Finance Minister moving from his residence to office, and this is FM stepping out of Finance Ministry.
That's interesting. Okay, and we'll of course keep on getting you more of these visuals as well. Just about a minute to go, really. And what we'll do is today we'll probably postpone Bloomberg Edge to a minute after market open and get you what we should be doing on that front in just moments from now. But yeah, it's all about the budget today, and that is something that you should keep at the back of your mind. But remember, it's just another day. If there is no event, then it's life as usual, aided by good earnings, aided by the fact that the global markets seem to be sanguine enough. So keep that at the back of your mind. Yes, it is a very important day, but it could well turn out to be a day and an event which is a non-event in particular. So do keep that at the back of your mind. So many stocks to speak about. I want to discuss Vakrangi and a bunch of others, but Pradeep, suffice to say, as we head into the budget, while we may have a flattish day, the cues aren't all that bad.
Yeah, actually, if you look at it, globally, if Fed was maybe a bit hawkish, that $1.5 trillion expenditure that President Trump has once again reiterated and asked for a bipartisan support, I think that is helping all the risk assets. So let's see how we start. 11,083 is what SGX Nifty is telling us, which means we could have a slightly higher opening, maybe by 10 to 15 points. The early quotes are 11,040, 11,068. Will that sustain? Well, it's difficult to say. Let's look at some of the heavyweights that are off to a good start this morning. We have L&T 10%. Could L&T move 10%? 9.5%? Well, let's see. Z ahead of numbers is up 2.5%. Hindalco is higher 2.5%. Well, because commodities are doing well, so that's probably justified. But HUL moving up by 1.5%, and also ITC. Will there be positive for FMCG in today's budget? These are two heavyweights actually. What's not doing so well is Kotak Mahindra Bank, Axis Bank. So banks are definitely worried about maybe higher fiscal deficit.
Yeah, I just want to bring up two stocks which fell massively yesterday, Vakrangi and PC Jewellers, and seeing what they're doing in the session today. We're down and out. Let's see if there is more pain today. Wow, 20%. That's another 20% for all the gains that Vakrangi Software had shown. It's really in the thick of action the last few days. 20%. This may change, of course. Keep that at the back of your mind. Want to see what PC Jewellers is up to as well. That one too took some punishment. Collateral damage, I might add. For now, showing a semblance of sanity. Maybe Vakrangi too could actually recover a bit. They've given out enough statements, but yes, it is in the eye of the storm for sure. Just a couple of others. I think Coromandel International, very strong set of numbers. Let's see if that is reacting. And I thought Vimta Labs. The reason I bring them up is small cap stock, but it's almost doubled in the last 6 months and 100% jump in PAT. No, not quite that kind of reaction. Last but not the least, IIFL Holdings. Typically, a promoter will come out with a demerger and a relisting plan if he believes that there will be wealth creation on the other side. IIFL Holdings not reacting too much right now. Let's see if it does show some reaction once the markets or once the pre-open rates settle in. Okay, 9:02. Let's. By the way, the rupee should come up on your screen just once before we head to Somit for the brokerage calls of the morning. Just see what the currency is doing in the session today. 63.68. Even Stevens just about a bit of a loss from yesterday's levels, but actually opening at the levels that it opened yesterday as well. Keep that at the back of your mind. Okay, let's go across to Somit with the top brokerage calls for this morning. Somit, good morning.
Good morning, Neeraj. And the top brokerage calls for this morning. First, we have Credit Suisse on JSW Steel. Now, they have maintained their outperform rating on the stock, but have raised the target price to 350 from 300. Now, they are saying that the third quarter results were strong, but what is more important is the outlook, which is better for the coming quarters. Now, JSW has confirmed that the prices have increased. The steel prices have increased by around 5 to 6% in January, and they believe that the iron ore availability in India is expected to improve going forward. Second, we have is JP Morgan on Dabur India. Now, they have maintained their overweight rating on the stock with a target price of 365. Now, according to them, the third quarter results were in line with estimates, and margin expansion was aided by revenue mix, lower promotion cost, and benign raw material costs. Now, going forward, they're saying that enhanced rural and innovation will rebuild the top line for the company, and pricing growth could come through in the first first quarter of the financial year 2019. Lastly, the management said that they are cautioned about the disruptive impact of the eBay bill which has been implemented from today. Third we have is Goldman Sachs on Kajaria. Now they have maintained their buy rating on the stock but have cut the target price to 770 from 825. Now the third quarter results according to them were below estimates led by lower average selling prices. Now the margin pressures that the company saw in this quarter is expected to sustain going forward, but they're saying that there would be volume growth because of this because of the shift towards the organized player that is happening because of the GST. And lastly they said that Kajaria on all parameters has outperformed Somani Ceramics.
Well, thanks a lot for that, Somit. On to our special segment, Bloomberg Edge. Well, a bit later than normal. I know viewers will be waiting for this. But Jayesh Khilnani tells us a pattern that the Bloomberg terminal has thrown up on a stock. And Jayesh, what's the stock on the radar today?
Morning, Neeraj. So I'm watching out for Engineers India. That is because, there is a 13% return potential on the stock. And stochastics have indicated a confirmed buy signal as of yesterday's close. Now, if you have a look at what the stochastic is, it gives you it identifies when a price move is actually overextended, and it measures where the current price is in relation to the recent high or the low that we saw for the stock. Remember that the stock has seen a decline from about 210 levels to about 170 in the last 2 months. So, that's where we are in the current scenario. While, the interpretation of the indicator is it is overbought when it's above 80, oversold below 20. And there is a, crossover between the two lines gives you the buy and sell signal respectively, depending on the direction of the crossover. Now, if you zoom into the chart, the bottom panel shows you the stochastic indicator, and you can see that the blue line has crossed above the white line, and both of them are above the green line, which is pegged at 20, which gives you a confirmed buy signal on the stock.
Well, and what kind of statistics we have to support the accuracy here?
So, Pradeep, if you had bought all the indications in the last year, net profit would be about 30%.
Thanks, Jayesh, for the update. Engineers India could well be in focus because what kind of announcement will come, it would benefit.
And the results were not bad either.
Yeah. So this could be another stock to watch out for today.
Fundamentally, Amit?
Pretty strong. And remember, Engineers India is one of the lead indicators of the capex cycle beginning to happen. Especially on the hydrocarbon side, where we're seeing L&T also getting good orders, and Engineers India also building up a good order book. So that's a lead indicator for the economy capex cycle to start up.
But so you would be positive, constructive.
Yes.
Okay, let me make your choice difficult for you. L&T, great numbers. Again, one segment which is hydrocarbons. Engineers India probably more dominant there. L&T good numbers. Engineers India good numbers. For a retailer who wants to buy one from a 2-year, 3-year perspective,
then I would probably back up L&T. The reason is it's a more diversified play and not focus on a particular segment. It's a large cap, and it's had its own share of underperformance. I mean, of course, it has caught up over the last few months in terms of performance versus the market, but still a huge amount of scope to catch up with the overall market performance.
Okay, and Credit Suisse has a target of 1700 here on L&T. That's interesting, but I think the most ambitious number is on ICICI Bank from Morgan Stanley, 480 rupees. I think that gives you maximum upside.
Bang for the buck.
Actually, do you believe in that, 480?
Well, I would not like to comment upon their price targets, of course. We continue to be quite bullish about ICICI Bank.
What's your target?
Well, we are yet to publish that report today. So I guess we should be somewhere in so I would probably not rule out a mid-teens kind of a return number on ICICI Bank over the next 12 months or definitely.
Is that the most constructive corporate-facing bank that you have in the private sector, or are you looking for an Axis or maybe a Yes or some of the others?
Well, within the private sector banks, I would probably prefer ICICI Bank and a Kotak. Remember, their Kotak number is also pretty strong, especially the credit growth on the working capital side has been pretty strong, and that's an indication that the credit cycle is just about starting to happen. And remember, Kotak's also has its share of underperformance over the last 3 quarters, so I guess they will also do some catch-up there.
Okay, we'll just get in Darshan in just a minute from now to talk about all the key numbers that have come out post-market hours as well. While we've spoken at length about some of the large caps, but quick analysis of what the heat map, as we call it, the earnings heat map looks like, and we'll do that in just moments from now. Samit Chavan, the first 8 minutes seem to indicate that Larsen & Toubro will be amongst the top gainers on the Nifty 500. Forget the Nifty 500 as well. Is that a trade that you can initiate on L&T at these prices of about 1450-58?
So this stock has already given stellar run in last 12 to 13 months, and it is trading around its all-time highs. Since last couple of days, we saw some kind of profit booking, but overall trend has been positive. And today, if it manages to sustain beyond 1442, which is Monday's high, then probably one can expect a decent momentum extending probably towards say 1470, 1475. So if one has to go long, then probably wait for a breakout to happen beyond 1442, go long with a stop loss of say 1430, expect a target of around 1470.
Okay. By the way, Vakrangi is not down 20, it's down 2.5. So after that mammoth sell-off yesterday, Vakrangi software just stabilizing a little bit. But I must say, what's disappointing is what's happened with Equitas. Though the asset quality is held out, but the numbers look very, very patchy. Despite the management's being confident of there being a turnaround in place, somehow Equitas not being able to live up to its promise. Had a bit of a breakout, maybe a false one. Have you looked at the charts of Equitas holdings, Srikanth?
Yeah, still like Equitas is consolidating close to 140, 150 levels. And the way the technical picture is there, I think on monthly and quarterly basis, it is reversing back whenever it falls to below 140 levels. So I'm of the view that again, if today also if we see any decline below 140 or 145 kind of levels, again the buying should emerge, because broadly the stock is very close to its IPO price, and even after hitting like 285 or 210.15, it again fell to the same levels, and it is consolidating around those levels. So number of NBFCs are very close to their important support areas like MFSL, Bajaj Finance, Bajaj Finserv, and they are very close to very important supports of last almost 1 year. So from here, if there is any specific positive announcement, then we can expect a strong rebound in all NBFCs. So we are of the view that if there is any fall, we should look for adding some long positions.
Okay. Well, less than 5 minutes left for trade to start. Let's tell you all that you need to know to stay ahead in trade today. Amongst numbers, Bajaj Finance, Power Grid, Ashok Leyland, Bajaj Finserv, CEAT and even MRF are slated to come out with the numbers today.
While L&T, Coromandel International, Reliance Infra, HEG, J&K Bank, HCC reports strong numbers.
JK Lakshmi Cement, Hindustan Copper, Aztec Life, Vimta Labs and IIFL Holdings are amongst the companies that have reported fairly strong numbers.
ICICI Bank, NTPC, Dhampur Sugar, Equitas, GE Power, IFB Agro, Munjal Showa were the ones that disappointed in third quarter.
IIFL to demerge and list 3 separate businesses, wealth, capital markets and NBFCs, the stock starting off about 3% higher in the pre-open session.
And watch out for auto companies as they report January auto sales numbers today as well. We'll have all eyes on these data coming in. But IIFL is one stock if you track with numbers and the announcement.
No, we don't.
You don't. So it will be interesting to see. But what is actually surprising, with so much input coming in this morning, there is not significant move in the stock price at all.
Yeah, maybe it's kind of moved quite a bit already. And I was just doing this analysis yesterday. Edel, IIFL and Motilal, from amongst the 3, Motilal posts the numbers and Aspar's disappointment has come off. Edel and IIFL are holding on. So despite a clutch of other NBFCs coming off, these stocks are trading close to the new high, all-time highs, despite the mid-cap and the small-cap.
So relative performance, actually.
So maybe, I don't know, I confess ignorance. Maybe the stock will be 8% now and I'll have to eat my words. But I'm just saying that maybe relative outperformance has helped IIFL and Edelweiss compared to some of the others. Well, let's wait and watch.
So not a surprise. Well, let's see now the prices have kind of stabilized, and we see a lot of movement in some of the hotel names. CIH Associates is up 6.5%. I saw a few more hotel stocks doing well in pre-open. Well, nothing that comes on my screen. Now you have sugar stocks, fertilizer stocks. I think agri-focused stocks will in general remain in focus in today's trade as well, going by the early numbers that we have, if you look at it, Neeraj.
Well, yes, so about 2.5 minutes left. Amit Khurana, before we thank you, I mean, if we had to bet on one thing that the budget is likely to deliver is a bit of a no-brainer and is a great investment idea as well. It's a difficult combination, but let me put you in a spot.
Well, then I would probably back something. So if I had to put one idea, then as we discussed earlier, Larsen would be one of the things that I would...
Or one theme as well.
One theme. So I would probably look out for infra as a very big theme. I guess this budget will only sustain what we have seen over the last couple of years, this government putting in substantial investments. Execution has been relatively not as aggressive as we would have wanted it or wished it for it. But I guess things are picking up. I mean, as we talked in our conversations to the key agencies, we are seeing execution picking up. And that's, I think, going to be the key theme for the next 12 to 18 months, that execution of these contracts will start showing up in earnings. We're beginning to see that happening for some of the large corporates and some of the mid-sized corporates. So I guess that is a big thing that I would play for, irrespective of what comes into the budget.
So Larsen or something else in infra?
Well, I would probably play with Larsen because it's a fairly wide, it's a proxy for economy.
Nothing smaller.
You can play smaller names, mid-sized names. There are a lot of focused companies on the road infra. There are companies on social infra. There are companies doing local state level capex, execution plans. But if you got to play one name, then obviously Larsen becomes automatic choice.
Okay. Fair call. Amit Khurana, thank you so much for taking the time out and joining us on this pre-budget discussion. Really good having you. All right, that's the view from Daulat Capital. Amit Khurana speaking his mind on what to expect from the budget and what to maybe invest into as well. Now, as we head into the market open, a minute left. Let's nail it down to that one top trading idea for the day. Samit Chavan, to you first, what would be your top trading call for the moment?
See, today agri theme being in focus, I would rather go with Southern Petro. Stop loss at 40. Near-term target is around 40.5, but a few months down the line, we won't be surprised to see the stock heading towards 60, 62.
Okay, so that is Samit Chavan's call. Samit, if you can just give me the levels again.
Stop loss 40, target would be 40.5.
Okay, and Shrikant, what about you? Your top call?
Neeraj, I would like to go with JSW Energy, which is trading around some 87.50, 88. Stop loss is around 85, and we can keep a target of 90, 91 on the higher side. Broadly, the stock is into strong hands, and it is corrected to its important support area.
Okay, so JSW Energy from Shrikant Chauhan's end. Now, 5 seconds to go for the markets to kickstart on this budget day. Expect a bit of green. The Asian markets have been supportive. The pre-open rates indicated that, and I would presume that the markets will start off with a bit of green. The Nifty Bank, not so much. This supported the markets yesterday, interestingly. The private banks moved up, not so much in today's session, but the Nifty and the Sensex starting off about 1/3% higher, not bad. The mid caps and the small caps, I would presume, would be also taking off some cues, at least the mid cap indexes, at least the small cap indexes. The mid caps maybe not so much, but remember, they had fallen quite dramatically in trade yesterday as well, so a bit of an overhang there too. Let's pull up the heat map. I want to see Larsen, ICICI and some of the others and how they are doing. Well, L&T starts off top of the pile, up about 3%, but overall, there's a fair bit of green on the screen. That's the key thing. A lot of green on the screen, some bullishness ahead. Now the market's actually picking up steam in the first 1.5 minutes, 0.5% up now for the Sensex and the Nifty. Not bad. This may not last, but not bad at all. Fair bit of green, not too many losers, save for maybe an NTPC post numbers. And Infosys looking slightly wobbly, but it was looking wobbly yesterday as well. So there's a bit of a dichotomy. Infosys and TCS not gaining too much. HCL Tech and Tech Mahindra doing rather well in the last few days. But it's all about earnings. Let me quickly mark 2 or 3 names before I hand it over to Pradeep. Some earnings reactions and some movers from trade yesterday. So Larsen & Toubro, robust Q3, and the stock duly reacting 2.5% higher in the session today. It wasn't all that poor for some of the other mid-sized names as well. So strong numbers from Coromandel, Vimta, HEG. HEG not reacting too much. I'm surprised. Maybe it's had a fair bit of run, but Vimta Labs up 3.5%. Not bad at all for this one. What else? There is IFL Holdings now. As we said, it probably wasn't reacting as much in the pre-open, but now up 5%. IFL to demerge 3 arms. List 3 businesses separately. So that is really working in IFL's favor. 5.5% higher. And 2 stocks, Vakrangi and PC Jewellers. PC Jewellers was collateral damage. That one is bouncing off. But Pradeep, Vakrangi, 16% yet another day.
Well, that continues, and may not be a surprise given the kind of news flow we have had, but probably it's also indicating something that Neeraj has been talking about for a while. There's some of the high beta names, when they start coming off, you see this kind of move, several stocks hitting lower circuit one after the other. But some of the key gainers this morning, other than IFL, would include Uniforce Enterprises, that's up around 5.5%. You have KEI Industries doing well in today's trade as well. Stock is up around 4.5% now. Nagarjuna Fertilizer, as I mentioned earlier, fertilizer stocks also in focus, but this is a bit of almost a penny stock. If you look at some more key names, Hindustan Construction is doing well, HCL Infosystems is doing well, so probably all eyes on Digital India and also infrastructure spending. TVS Electronics also moving up along with HCL, so that's again something maybe looking at the budget really. On the negative side, we also have GE Power losing, so there is some disappointment out there. Hindustan Copper is down around 3%. Shoppers Stop is another key loser in today's trade, and Titagarh Wagon. Well, we have seen this earlier when, on rail budget day, there used to be massive profit booking in all these railway stocks, and now, of course, railway budget is a part of the main budget.
Yeah, so watch out for all of those. Just final thoughts from our technical experts as well. Shrikant, anything that pops up on your screen in the first 3-4 minutes of trade?
I think all these oil and gas companies are have shown a good amount of recovery, maybe because of there is a short covering because a lot of people have shorted this. And while looking at the chart of crude and Brent crude, I am of the view that it is going to cool off for at least next few days or maybe few weeks. So we are of the view that now 70 and 65 is the range. So in that period, we may see some activity in all these oil and gas companies, especially BPCL, HPCL and IOC, but we like BPCL, and there we are expecting further more momentum. So we can focus on these companies for next few days, along with Reliance Industries, which is trading around some 965, 970 levels. And Neeraj, if you go through with its short-term as well as medium to long-term pattern, it's a very strong bet. I think it is going to cross 1,000 in a very short span of time.
Okay, watch out for these. Samit, anything that pops up on your screen for you today?
See, M&M certainly looks good. It has been consolidating off late, but today in initial trades, we are seeing some kind of buying interest in this particular counter. It is on the verge of giving a breakout from a resistance of 774. And as a disclosure, we've already anticipated this breakout, and we have recommended 780 call option, which is trading around 17-18 rupees right now to our clients. So one can go long in this particular strike price. Stop loss somewhere around 8.4, and we are expecting a decent target toward 35-36.
Well, thanks Samit and Shrikant for joining us this morning. And Nifty is now up almost 40 points at 11,067, doing much better than what actually the SGX was hinting at. Nifty Bank is up almost by 100 points. Basant Maheshwari, partner at Basant Maheshwari Wealth Advisors, joining us on the show now. Good morning. Basant, well, I know that you are not an investor who believes in, what happens in the market one day, what happens before or after the budget. But what's your belief? Last few budgets have been good for long-term investors like you. Will today's budget be all the same?
Good morning. Good to be with you again. Couple of things here. Normally, the relevance of the budget has gone down. It's gone down because earlier you used to have those excise tinkerings, and you used to have excise going up on cement. It's coming down on tobacco. So that's gone now. That's been taken over by the GST. So, and secondly, there's so much of talk about how the finance minister is going to kickstart the economy. I don't think there's any talk required because they've done what they wanted to do. Now it's just the last bit of tweaking required. And being a pre-election year, I think it's going to be populist. Only thing I'd like to look for is, I don't want LTCG to come in, because if LTCG comes in, it means my gains are reduced by 30%. So, or 15%, whatever. And I'm going to look at the broad fiscal deficit number because that's how the market perceives it. But normally the shelf life of a budget is 792 hours, 720 hours before it and 72 hours after it.
But if suppose only the duration is extended, which means you need to hold on to a stock for 2 years or maybe 3 years to avail of zero capital gain, would that be fine with you?
Nothing would be fine that changes the status quo, but you have to live in a country and you have to abide by the law. So we don't do that. But I don't think, in all our bravery and valor, we can say it's fine, we are long-term investors. I've held stock for 6 years also. But when you compel me to hold it for 2 years, then, see, we make money because we give a price earnings ratio to a company because we assume this is the amount of money we'll make. So if the amount of money that we make, even in theory, if it were to fall by say 15%, then obviously the P has to come down at least temporarily. It's just like saying government increasing corporate tax rate on profit-making companies by X%. So it's going to be impacted, whether it's 2 years or 3 years, whatever. Markets are driven by sentiments. And at the present juncture, I don't think the government is going to destroy the apple cart, because the Nifty is the biggest barometer for this government to show that they've achieved what they wanted to achieve. Beyond the Nifty, I don't think there's anything bigger that they can show to the world right now. So they will not disturb anything. They will not destroy anything. I'm completely convinced of that. The only and Modi ji kabhi kuch warning deke kuch nahi karte. So there's too much of talk. I don't think he's going to do it.
Okay. Basant, good morning. Neeraj here. Just wondering though, the way the market is prepared, at least in anticipation, if not in action, about the possibility of some tinkering with LTCG, the best of the worst outcomes, if I can use that term, would be that the tenor is changed, which means there is no long-term capital gains tax coming in. It's just the holding period increase. Do you think that has the ammo to disturb the sentiment completely, even such a small move?
Temporarily, yes. But if the tinkering is only with the duration, after 1 month, there won't be. But you have to understand what happens after that. So if the duration is increased from say 1 year to 2 years, then people will say, hey, let's buy a stock which we can hold for 2 years. So maybe stocks like Nestle, HUL, ITC, we don't own it. I'm just giving an example. So those kind of companies would tend to go up, and the crappy stocks that are really leading the market right now, they would tend to come down, because you want to own a company which you can hold for 2 years, and it's very difficult to put a bet of 2 years on all the 6,000 kind of companies. So I think there'll be a flight to sustainability of the business models, and that's the only thing. But if it's just from 1 year to 2 years, beyond 1 month, it wouldn't matter too much. But if there is an overall tinkering, then obviously then it will be difficult for us to actually handle it.
Yeah, well, I agree. But maybe some people would welcome that. You know, I'm reading a tweet from you, Basant. As of Jan 30th, which is yesterday, before yesterday, शेयर बाजार में कचरा से पैसा बहुत कम बनाते देखा है, बट पैसे को कचरा almost सभी लोग बना लेते हैं. And as you said, the last 1 odd month, we've actually seen a bit of a reversal in that trade, wherein a lot of sketchy names have been punished after the brief rally that we saw. Assuming it's status quo in the budget, no tinkering at all of anything which will impact sentiment or otherwise, what's ahead? Do you think the underdogs, the underperformers once again come to the fore, or the flight to quality sustains?
It's not about flight to quality, Neeraj. I think whenever the market reaches a situation that it was in for the last, say, 45 days, where all kinds of companies were going up, it just tells you two things. First, the retailers are very active, and retailers are mostly the guy who come in nearer to a top. I'm not saying it's a market top, maybe an intermediate top, maybe it's a top for a couple of months, and markets don't stay in one place. There is no status quo. It's always inertia. Either it's going up or it's coming down. And secondly, it also tells you, look at the kind of stocks that are going up. Anything less than 500 rupees was going up, and anything above 500 rupees nobody wanted to see. So it tells you conclusively that the people who are coming in, they're chasing price and not performance. So when you chase price, you chase it both ways. So if the price goes up, you buy more of it, and then you buy more of it, and ultimately your maximum allocation is at the top. But if the price comes down, then then you don't want to buy any of it, because there's no argument left for you except price of these stocks. So I think the story with these small craps, as I call them, many of them, not small caps, many of them are small craps, and people will realize later on what happened, because I've done this in the past, 25 years back, 20 years back. We used to do this all the time. Arey yaar, ye bhad gaya, mera share nahi bhada, isko becho, wo le lo, usko becho, wo le lo. So these are not vegetables and fruits that you buy because this is a seasonal fruit, let's have this. So I think this story is gone. The story of chasing faulty names with questionable business models. But obviously there's nothing wrong with the market. I think market will do fine, and the government will ensure that the market does fine.
But you know, some of those small cap and mid cap names which are not really crappy but good investment ideas, some of those maybe you would also be invested in, and lots of these mid cap and small cap funds are invested in. Are you worried about the kind of valuations that we see today provided to all these stocks, and would you be worried about a crash, maybe even the prices of some of the quality companies?
No, I don't think normally quality companies you don't get worried with, because when prices drop, the earnings come up, and you know there's a two-way correction happening. The first correction is the price coming down, and the second correction is the earnings catching up. So the waiting period gets reduced dramatically. But in companies where there are no earnings, so when the price falls, then you have nothing to justify your investment in those companies. So if there's earnings back up, there's nothing to worry. You should buy more of it. But if there's no earnings back up and you've bought it because somebody's done a block deal or somebody's just whispered in a ear or somebody's told you over kulfi, so I think those are the kind of stocks you better be sure. What happens is people normally buy 50,000, 1 lakh rupee worth of stocks and then they post it all over. So I don't think serious investors are also buying it. It's just the people who want to have a little bit of fun in life. So instead of Las Vegas, they're coming to the National Stock Exchange. Those kind of people punt these stocks up, and then after a couple of months, a couple of years, they'll say the stock market is a bad place to be in.
Okay. Any kind of new ideas that you are working on these days, or you're waiting for a decent correction?
No, we don't wait for corrections. We put in the money the moment it comes. If it falls, we buy more of it as much as we can. And there's nothing new right now, except that I think the overall economy should do well now. And it will do well not because there's been some magic happening. It will do well because the base has got butchered. So we haven't done anything for the last 2 or 3 years. And then there was the demonetization, there was the GST and all those things. So obviously the base impact would play on. And I think now optically the results would appear good. And 1 year before the election results, 1 year before the elections, the government would throw a lot of money. So this government would become a grand expenditure type government. And any government does that. There's nothing wrong with this. And governments have to win elections. That's how they get mandated into power. So I think there'll be a lot of money thrown at the hand of the consumer, the rural India, and that's the standard things, the cliche talk that I keep giving. But ultimately, you don't own stocks for 6 months, for 9 months, for 1 year. You own stocks for a longer period of time. And for that, the sustainability theory would come back to the fore.
Okay, by the way, just a brief mention, Escorts has run up after those very strong sales numbers as well. So that stock is up about 4%. Keep that at the back of your mind. And L&T and L&T Infotech continue their merry ways. But Basant, before we wrap up this discussion, I have one question on a very curious action that one corporate took. You may not have a view on this corporate individually. You know what I'm talking about, Vakrangi Software. But, after a company, VRL, tried to dabble into getting into this off the core business a bit, and the stock was punished. We see yet another instance. There are multiple things probably going against Vakrangi, but with all the fanfare that the stock went up, it's coming down with equal gusto right now, 20% for the last 2 days. What's your opinion here?
Of course, it's not a recommendation, but it's been years, and every time I picked up the balance sheet, I looked at the stock, I said we should buy it. And for some reason or the other, we got saved. Because there's one simple theory which I can share with you, Neeraj, which I keep talking all the time. Anything that hasn't happened in the West doesn't necessarily have to make money for you in India. For example, there are companies, mortgage financiers, there are grocery retailers, there are cement companies, there are construction companies. You find them making money for you in America, in US, in UK, in Europe, everywhere. And whenever you find a business model that hasn't worked anywhere in the world, I don't think it's going to work in India, because India is not the land of original business discovery. India is a land where we copy business models from the West. So that was the only thing that saves us as investors, because I was really intrigued. High ROE, tax-paying company, dividend-paying company. Come on, beat it. How much can you argue with me against Vakrangi? But still, in spite of that, we got saved. We didn't get sucked in because for some reason or the other, we were just a little reluctant to buy stocks that haven't worked anywhere else. So these kind of, now let me tell you, Neeraj, what happens is these kind of stories get busted only nearer to the end of the cycle. So once a Vakrangi comes in, so there are at least 50, 100 more companies like that. Say, I will buy your company, you buy mine. So it's like I scratch your back and you scratch mine. It's the same theory. So unless you get caught, it's kind of fine. But that's why we have to invest in quality, because all the gains, I think Vakrangi is down 40-50% from the top almost. So all the gains wiped out in a week. That's how hard the market is. You take 5 years to make what the market takes 5 days to recover back.
Yeah, it's certainly been the case with this one. Basant, really appreciate you taking the time out, more so giving your thoughts as well but as standard disclaimer, not a recommendation from Basant Maheshwari, just a thought out here. But thanks so much for joining in today and giving us your thoughts.
All the best, Neeraj.
Thank you so much. Well, the market's in fine fettle. We take a short break, but up on the other side of the break, we turn our attention back on the big event of the day. Editorial Huddle with Raghav Bal coming right up.